Thanks for joining us from the Ohio AgNet Voice You Know It, the News You Trust studio, sponsored by Grain Equipment Company, where innovation meets execution. I'm Dale Menyo. NASDA's members-led board of directors chose 5 issues to serve as the organization's primary policy focus for 2025. They include the Farm Bill, food systems, pesticide regulations, and state cooperative agreement funding. NASDA's CEO Ted McKinney remarked on the significance of these issues for 2025. NASDA has published pagers offering background and insight for each of their policy priorities. The upcoming Farm Bill must be dedicated to supporting American agriculture and essential food and nutrition assistance programs. This bill shapes agricultural policy, supports farmers, ensures food security, and promotes sustainable natural resource management. NASDA will advocate for policies and programs that fortify U.S. food systems, enhance supply chain resilience, and improve reliable access to nutritious foods. They will engage with EPA to ensure science-based standards and state input are incorporated in regulatory initiatives such as the Endangered Species Act Work Plan. They will advocate for Congress to restore and increase funding for cooperative agreements. Cooperative agreements are designed to increase coordination when addressing complex regulatory issues and sharing resources between state and federal governments. NASDA is focused on 3 cooperative agreements that require immediate attention: FDA state and local food safety programs, USDA's state meat and poultry inspection programs, and USDA's Animal Disease Protection Program. Today's weather brought to you by Seed Consultants. Simply better performance online at seedconsultants.com. Here's the forecast.
Clouds increasing today. We'll end up with some rain in Ohio overnight tonight. I'm Chief Meteorologist Ryan Martin. Let's take a look at that Ohio Ag weather update. Here's what's going on. Good rounds of moisture developing today off to our southwest. Ahead of that, clouds will increase, I think, this afternoon, and we're going to be quite mild. At this point, I do not look for rain to start in southwest and western parts of Ohio until probably after sunset. But then it will then spread and continue through the overnight and through most of your Friday. We actually have a secondary low that forms a little bit farther north that will give a chance for some bigger rain totals in northern Ohio before the system's done. I still think, though, that most of us are going to fall in that 1/4 to 1 1/4 inch range that we've been laying out the past few days, so some good moisture potential to finish the week. By the time we get to midnight on Friday night, it's done. Saturday is a slightly bit cooler, but still seeing good sunshine under high pressure. Sunday is mild, pleasant overall. Monday, same thing, quite warm, mild. Tuesday, we stay mild, but start to see a little bit more cloud cover coming in as cool air sags out of Canada. High pressure is going to be in charge behind that for Wednesday and Thursday. Late in the week, we also have another round of moisture trying to lift up from the southwest. Could give some scattered showers from areas US 30 south for Friday the 7th. 1/4 to 3/4 of an inch is all that we're seeing right now. We follow that up with a dry weekend and a warm weekend. Temperatures are going to be yo-yoing then toward mid-February. That's a look at your forecast. I'm Ryan Martin.
Time now to take a look at this week's Ohio Soybean Update, brought to you by the Ohio Soybean Council and your checkoff.
I'm joined today by Dr. Horacio Lopez Nicora, soybean pathologist and nematologist at The Ohio State University, talking about what they saw when scouting fields this past year and the incidence of downy mildew.
At the same time that we were still walking fields, not feeling that extreme heat drought that we experienced later, we also started seeing the developing of downy mildew in many places of Ohio. Downy mildew is a fungal-like pathogen. And I say this because it looks like a fungus. It grows like a fungus, but it's not. It's in a completely different of the tree of life, if you want to call it that way, right? It's pretty much closer to plants than to fungi. And these are the oomycetes. That's the group that this particular pathogen belongs to. And I'm saying this because it's important when we decide to adopt fungicide selection to spray and try to manage it, we will not be very successful because most of the fungicide available for spraying foliar fungal pathogens will not have any effect on this particular organism. It's an oomycete, and the typical fungicides that we use, which target fungal structures or organs or parts of that organism, will be completely absent here, and therefore no control. It will be a waste of time and money.
Today's Soybean Research Update brought to you by the Ohio Soybean Council and Soybean Checkoff.
And thanks, Dusty. Retail fertilizer prices continue to be slightly higher than a month ago, according to sellers tracked by DTN for the third full week of January. Now, this marks the fifth consecutive week most prices have been higher, but none of them have been significantly higher. Now, the six slightly higher fertilizers are DAP, Urea, 1034-0, anhydrous, UAN28, and UAN32. That leaves MAP and potash fertilizers slightly less expensive than a month ago. A recent article from the University of Missouri Extension said corn producers should evaluate their operation for opportunities to reduce fertilizer application in 2025 without reducing yields. This comes as profitability could be in question in 25 growing season for many corn producers. John Laurie, University of Missouri State Nutrient Management Specialist, said those who maintain their soil test levels near optimum face little risk of yield loss when postponing applications of lime, phosphorus, and potash for 1 to 2 years. The goal of current recommended soil test is to ensure no part of the field is insufficient in P and K, Laurie said. You have multiple years of buffer in the system where P and K soil test levels are medium to high. Another opportunity to trim fertilizer cost would be to run a strip trial to see if lower rates of P and or K reduce yield. A strip trial testing lower rates or testing zero versus your rate will reduce your fertilizer cost, he said. It is much easier to lose money by underapplying nitrogen than it would be with P and K, Laurie said. 3 fertilizers are now higher in price compared to a year ago. DAP, MAP, and 1034-0 are all 1% more expensive than last year. The remaining 5 fertilizers are lower. UAN28, 3% lower. Anhydrous is down 4. UAN32, 6% less expensive. Urea is 7% lower. And potash is 13% lower compared to last year. And this upcoming Friday, January 31st, the highly anticipated cattle inventory report is set to be released. For this current cattle cycle, the market saw a peak in its cow herd inventory in 2018, when the cow herd totaled 31.8 million head. It wasn't until 2022 that mass liquidation became undeniable for the market, as much of the country struggled with severe drought and nearly unattainable profitability from the grassroots level. Last January, the cattle inventory report showed the beef cow herd at an all-time record low of just 28.2 million head. However, with the shift of leverage in the marketplace over the last 2 years, allowing cow-calf producers the opportunity to capitalize on all-time record high prices, everyone is wondering, is there any chance the U.S. beef cow herd has seen some growth? And let's stay on the cattle market for a second. The past 2 weeks have brought about further escalation of record high January fed cattle prices. In the 5 area reporting regions, Nebraska, Iowa, and Minnesota were once again the highest, with last week's averages just over $210 a hundredweight. These regions are reported by bulk and negotiated fed cattle trade volume. Kansas feed yards sold just near 7,500 head last week in the negotiated market at $202 per hundredweight, with the Texas, Oklahoma, New Mexico region trading just 1,690 head at $201 per hundredweight. Now, the supply of harvested cattle remained fairly tight as the weekly totals slipped down to 599,000 head, a 4,000 head decline over the week prior. The fed steer and heifer portion of weekly harvest head counts have been very near those of a year ago in the past 2 weeks, while cull cows throughput has been 12% smaller than a year ago. Live cattle and feeder cattle future prices have been forced higher as live cattle contracts had been lagging negotiated values until recent days. Back with the grain markets and analysis after this.
Hey, pork producers, it's almost time for the 2025 Ohio Pork Congress, your connection to all things pork. It's back in Lima, Ohio on February 4th and 5th. with the latest on swine health, facility management, economics, and product innovation, all within the largest pork industry trade show in the region. So make plans now to join us at Veterans Memorial Convention Center by going to ohioporkcongress.org for more information and early registration discounts on tickets. We'll see you in Lima.
Morton Buildings is holding their annual Building Value Day sales event running now through the end of February. Morton Buildings are built stronger, last longer, and look better. So if you're planning for a garage, farm shop, stall barn, a storage building for your RV, boat, or collectibles, or anything in between, act now and contact one of their 4 Ohio offices by visiting mortonbuildings.com or call 800-447-7436 to take advantage of their current savings on select new buildings. Certain restrictions may apply. This offer is available on select building styles. Contact your local construction center for more details.
Today's market's brought to you by Seed Consultants. Simply better performance online at seedconsultants.com. I'm going to recap yesterday's closing figures for you. It may draw more attention to what Ryan Martin has to say in a couple minutes. March corn was up 11 3/4 to $4.97. December corn up 5 3/4, closing $4.66 3/4. The March soybeans 10.60 up 15.5. November beans were up 16, closing at 10.63 cents. The July wheat $5.88, up 17 3/4. Today's market analysis is brought to you by the Louis Dreyfus Company. Excited to be building the newest state-of-the-art soybean crush facility in Upper Sandusky, Ohio. Want information on marketing your soybeans to LDC? Give them a call at 574-566-2113. Now with a look at the market analysis, here's Ryan Martin.
Grain markets finished on a mostly higher note on a Wednesday. A little bit of a surprise as to the magnitude of the move up. Double-digit gains in corn, double-digit gains in beans, and honestly, we had double-digit gains in the wheat markets. Everybody finishing strong, and we finished near the highs. That's what was the most surprising overall. Now, as we take a look at the reasons behind it, let's talk first on corn. Weekly ethanol production dropped 7% due to the Arctic cold, so that should have hurt the corn market a little bit. Surprisingly, it didn't. Other things in the marketplace were the corn and soy meal leading the upside. Traders are suggesting that drier than normal South American weather is a bullish catalyst. I'll be honest with you, I don't buy that. So if you're reading between the lines, I'm thinking yesterday's move was a little bit of a farce. We'll see if I'm wrong here as we move through the day today. Part of the reason why I say that is the fact that South American weather, there's been significant rains in parts of Brazil over the past couple of days, and there's more rain coming to Argentina. Also, we're seeing significant amount of inflow of new speculative buying in corn. That's because we pushed it to a new contract high yesterday, and we continued to keep going. So this could be a technical rally as well. There's no fundamental reason for the large speculative purchases other than charts pointing upwards and momentum trade coming in. China is remaining in a deflationary spiral. U.S. inflation is tame at 2.4%. If U.S. inflation reared its ugly head, higher lending rates from the U.S. Central Bank would follow. Moving into other issues, basis. Basis continues to weaken. Central Illinois sees corn bids drop fairly quickly. On the bean side, we're seeing basis hold firm for now. Weekly ethanol production, 298.4 million gallons. Stocks held steady. Lower ethanol grind is now forecast for the industry for the next little bit. I'm Ryan Martin.
And thanks, Ryan. At the overnight open, March corn down 1 3/4 at $4.95 1/4. The maize down 2 at $5.05 1/2, and December new crop down 1 1/4 at $4.65 1/2. Beans also giving some back. March down 3 3/4 at $10.56 3/4. May down 3, $10.72 1/4, and November $10.63 and down 1/2 cent. March wheat, $5.61 1/2, down a penny. July new crop, $5.87, down 1. Carry that out to September, $6 1/2 cent, and down 1 penny. In livestock, February cattle, $207.02, down $1.52. April closed down $2.32 at $204.95. The June was $198.75, down $2.60. Hog split, with February unchanged at $83.90, April $91.32, up 42, May down 15 cents at $95.32. March feeder cattle down $2.97 at $275.27. April down $3.20 at $274.60. Thanks for joining us. I'm Dale Minyo. This is the Ohio AgNet.